What up, YouTube Digital? Sorry about the long of the other one. I could be there. I could do 5 hours on social health care and how much it fails, but I try to make it as short as possible. I didn't even get into it. Doesn't cover shit. I mean, it's like Medicaid. It doesn't cover anything. But anyhow, taking a piss on the lawn here, and I want to talk about how insurance makes money, because that's a big misconception. Now, HBR Media kind of had it right, but it's not that easy. There are two major forms of insurance. There is single payer, which means pretty much you have a direct contract with the insurance company, kind of like how auto insurance works. And then your money is transferred into the insurance company's coffers, and your payments and everything are based on risk. Your age, your sex, your smoking, non-smoking, yada, 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 yada. Okay? This is usually a smaller employer deal. Under 2,000 employees, or any union under 2,000 employees. So, they do make profits on what's left, but a lot of times, they don't even make that much profit anymore in those types of lines. What's becoming more standard is, especially for large employers, is what's called group, and that's also known as TPA, multiplayer. If you go to Wiki and you type in health insurance TPA, you'll get a good write-up of what it is. And the one misconception is, like HBR Media was talking about, we'd make profit on what's left over, and actually we don't, because usually this is how it's set up. Is an employer group. Let's just say I make digital computers, and say it's like a clone of Hewlett Packard. I got about 75,000 employees, yada, yada, yada. And so I go out to bid for insurance. I got a broker on my side, and we're going to find the right company. And they could do this every year. And there's some companies that do. And we are looking for what's going to cost us and the employees the least, and give us the best option. Just as normal as everything else. And so we're going to look at things like the technology they use, the network they have of doctors, the claims payment, the percentage of correct payments. There's hundreds of different things that we're going to look for besides just money. So basically, they'll find a company that matches them. And usually nowadays the technology wins. With fraud detection, with being able to process claims using smart technology. So, like, if a doctor submits a claim for an office visit, and he also submits a claim for, like, the tongue depressor and everything else, we're going to deny it and say that's part of the office visit. You can't charge us for a tongue depressor. And you'd be surprised that a lot of companies can't do that. And they don't survive, because especially there are all these types of what are called shit, man, I'm drawing a blank today. But there are policies for billing, multiple procedures, bilateral, which means like right and left. So if you're having your knee scope, you can have a bilateral scope. So the first one would be at 100%. The second one would be at like 50%. Since, you're already in the ER, or you're already in the surgery room, you're already under anesthesia, you're already, so they're not going to get double payment. Stuff like that. Then, so you got all that stuff. Then you also got the fraud detection, which I can't really go into. Because I think my future deal is always been fraud, so I think I want to get in that department. But then on top of that, it's how good are you guys paying claims? How many do you get right the first time? And I think we get pretty damn good. Better than what people could even imagine. It doesn't mean, we get 1 million claims a week, so it doesn't mean we don't have errors, but our errors are very small. And then also, you got to do like customer service. What's your average handle time? What's your average wait time? What's your average, complaints? What's your average, all that type of stuff. So all this stuff comes into play. And then, it gets all compiled and everything else. And then it's also the technology of what type of programs are we offering to keep healthcare costs down. Like insurance companies copy each other a lot. Some companies like, mine start the wellness shit, which now has gotten transferred over to other companies, where they're trying to get people to, go see the doctor every year. Women, under most state mandates, women were able to do that anyways. So, but they're doing it for everything because, let's just be real here. If you go to the doctor and charge $100, that's cheaper than coughing up blood and going to the hospital and find out you're stage 3 lung cancer. And you'd be surprised how many people are. And then they want to fight it. So there's that. There's those type of programs. Then of course there are ancillary programs. Nurses, nurse lines, mental health type stuff. Wellness programs where they come to your employer and stuff like that. So there's tons of stuff, and they take all that into consideration, and then finally they come to a conclusion of who they're gonna get. All right, I gotta reposition here, but then the bid goes through. We know what it's going to cost, and at that point, they sign the contracts and everything else. Now, HBR. Whoa, I was getting water on my tablet there. Now, HBR Media was talking about profits from what's left over in the coffers, and that is kind of how fully insured works, or single payer. But when you have self-funded, we don't get the coffers. When it's that was cold. When it's TPA or self-funded, we set up a joint account, and the employer takes the money out of your check. They put it in their account. They hold on to it, and every X days or months, or it's usually days or weeks, we contact the employer and say, okay, we got X amount in claims to process, and they wire over the money. We pay the claims, and then we go on. So we don't really get paid in a group setting. We don't really get paid on what's left over. We get paid a percentage because we technically are not the insurance company. The employer group under law is the insurance company when it's group. We are we are a service company, and we provide a service. So we get paid a percentage of all the health care money spent. So I can't divulge that information because every corporation is different, but my company is one of the lowest, and the percentages is actually not that big. You know, people think that, you know, we make trillions of dollars off of, and it's not really how it works. So if somebody goes to the doctor's and it costs $100, we get a percentage. It's kind of like a tax, and it's much cheaper than most sales tax, I'll say that. Sometimes even half. So that's how we get money. Then we also, there could be some bonuses and stuff like that. If there's a situation where there's performance guarantees sold along with it. So like some employers will say, if you take our phone calls at, you guarantee you pick up the calls within 3 minutes of it ringing, and you do it 92% of the time, and you get the people off the phone within blank, 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 90% of the time, you'll get an extra XXXXXXX. So there's performance guarantees put in and stuff like that. And most of the time we make them. There's not that often that we don't, because we have the technology. Like when I was doing the kind of like HR side of things, I could transfer calls and everything else. It's kind of, the technology that we have is insane. And you can route calls on the fly. So there could be like 30 people in the office doing absolutely nothing, and I can give them 10,000 calls in a second. It's kind of cool like that. So yeah, a lot of people think that we make money if we deny claims and stuff like that. That's how we make it. That's absolutely not true. Actually, we can lose money if we do not pay a claim right. That could be a performance guarantee as well. You know, if we they might say like, you have to have a 98% correct payment rate, and if you don't, you owe us X, but if you do, we'll give you an extra $1 million, whatever. So no, we can actually lose money if we don't pay them. So that's a big misconception. So we don't get what's left over. We don't get any extra. We only get it if we do our job, because we're a service company. The other thing, the employer does not really get any extra either, because most of the time they're kicking in either 20, 30, 40, 50% of the cost. they're kicking in themselves. But it's still cheaper than it would be to do single payer, because if they were matching individual accounts, that would just cost way too much. You got an apple tree going nuts right there. I gotta come up with something to brace some branches. But yeah, so in a way, it's kind of like what HBR said. It's just it's kind of backwards, because fully insured makes the profit based on what's left over, and group makes the profit based on a percentage of, from the service, and sometimes bonuses depending on who the group is. I mean, there's groups out there that want to be special. They want their own operators, they want their own claims adjusters, and everything else. I mean, there's some groups out there that only want 3 people to take calls from their executives. I've been on one of those. I've been that. I've been on the executive thing. There's some groups that have heavy expatriates, which means American workers working in foreign countries. And they only want certain people to handle them because a lot of them are executive level. And that's how I got to know people from working in China and Taiwan and stuff like that. Because I know how to pay foreign claims. So, yeah. A lot of misconception. Oh, the other thing, I don't know if I mentioned it or not. The government plans, all of them, TRICARE, Medicare, Medicaid, they're all TPA. So people think that even if they say no more private insurance, they still would have the same companies around, the same big companies that have been doing the work. They would just be doing it for the government. That's it. Nothing would change. We would just get paid from the government instead of the employer. And we would get paid more. Much, much more. That's all I can say on that one. But I would still have a job, guarantee it. That's why I was never worried. I mean, I was worried because of how ridiculous the plan was getting, but as far as having a job, no. Nope. They can outlaw it tomorrow. I still have a job. So, another big misconception, because people don't know how it works. See, one of the things under TPA, we allow people to use our letterhead. So a corporation can use our letterhead. Okay, so they can send out letters in our stationery. But just the same, they can take our name off of it if they want to. So there's corporations that have us as deal, but their employees don't even know. Because they want it kept quiet for whatever reason. Don't care. Money's good, don't care. But HBR is right. If they do take that law out, it would screw up competition. But the problem is the competition isn't that much competition anymore. The competition, it's kind of like, competing with Microsoft. Your competition is, the thing what your competition does is come up with something that Microsoft needs. That's what they do. And then Microsoft buys you out. That's what competition is in the industry. There's about 10 major players. Those 10 major players are still major players. They'll still be major players. We all got offices in pretty much every state. So we can write in every state. But it's the smaller ones that come up with some of this coolest technology, and then they end up getting bought out by the bigger ones. So that's how that goes. So yeah, there's still a huge area for these smaller insurance companies to be, but they're like beta testers for us. And then if they're good enough, we buy them out and make some people money. And I could tell you right now, off of what people think we make compared to what we actually make, is not even in the same space. So people give us too much credit. If we made as much as people said we make, I'd be making about $300,000 a year. So, anyhoozle, yeah, peace.